high will gold climb? Why should you learn about it now? And have we missed the boat? These are some very important questions that are going to be asked at the Gold Coast Gold Conference taking place on the 25th of March. Here to help me answer a couple of these questions now is the principal of Noah's Rule, Sean Russo. Sean, mate, it's a pleasure to see you again. How are you?
Nice to see you, Shay. Good, thanks. Very well.
Now, I have very much stolen from the program with a bit of a tease of your headline of your presentation, which is, have we missed the boat? Fine, Sarah, I put it to you. Gold prices have been rallying lately and they've come off a little bit. Have we missed the boat?
Yeah, look, I think it's a never-ending thing with markets and with gold mines. And I think the last couple of Kerry's conference, I've tried to make the distinction between what you might do as a short-term investor and what you might do as a long-term investor by talking about what I might do in terms of trying to create wealth for myself and my wife, and what I might do to have a plan to help out my granddaughter who's one. You know, what would I do to build up a nest egg that I might give her when I'm 21? And I think, you know, that's a good background even for what's going on at the moment. I think people generally would say to you, I can tell you with reasonable confidence where the market will be in a week, but I've got no idea where it'll be in a year or 5 years. But it feels to me a bit at the moment that you can have more of a kind of a broader faith of where the market might be in 3 to 5 years than where it's going to be in the next 3 to 5 days with everything that's going on in the Middle East and in Donald Trump's head. So, you know, I think, have we missed the boat? You know, it's a connotation of the old days of the seafaring. You know, you missed the boat, that might be it. You might get another boat for another 6 months until they're coming along. It was back, I think, when that expression first came about, you know, it was missing the boat was a big thing. I mean, of course, in this world, a new opportunity comes up every 5 seconds, so it's a bit different. But I think what I wanted to try and get across in the context was gold has run a long way. It's a lot higher than it was when I spoke in the Gold Coast last year. Even when I spoke at Kerry's conference in Sydney, it's been continuing to go up. It's a little bit lower than it was in January at its peak, but really the prices that we're trading at right now show 5,000 US, 7,000 Aussie. Yes, we've been higher than here, but only in early part of this year. And so we're really trading up still around record highs. And it does feel a bit lofty here, and it has been coming off. And I think a few people who aren't so familiar with the gold market were kind of disappointed or surprised it didn't go raging up in time of war. But I think, or it is a war, isn't it? I don't know. Maybe it's not. Is it an incident? I don't know. They keep on not wanting to refer to it properly, but it looks like a war to me. I think we've sort of got this situation where you look at it historically. People in the East accumulate gold all the time. You and I have talked about this before. People in the East accumulate gold all the time. That's their savings. That's the way they save. In India, you know, through the Middle East, certainly, and right the way from it right through into Japan and, of course, China. And so they're accumulating all the time, and they accumulate. So in times of crisis, they have gold. So remember the queues in Asia during COVID weren't to buy gold. They were to sell gold because no one had a job and they needed money, and they weren't getting stimmy checks like the people in the West. Whereas the people in the West tend to queue up more towards the highs, as we saw recently, the very famous queues outside ABC and Martin Place. So time frame, context, market looks very high. So I thought, well, have we missed the boat? Is gold expensive in a way, is really what you're saying. And I think it's very, very expensive relative to wages, as I demonstrated in my presentation at the RIU in Fremantle. So it's never been more expensive for people in Australia, the UK or the US to buy an ounce of gold in terms of how many hours of work you have to do to buy it. So it feels very expensive from that perspective. That speaks more to wages really not having kept pace with inflation for a long time. Shay, as everybody knows, if you look at house prices in Australia relative to wages. But on the other context, gold doesn't look expensive relative to general equities. It doesn't look expensive relative to the S&P, to Nasdaq, to the Dow. It's starting to look expensive relative to the Australian stock market. potentially. It's not expensive relative to Chinese equities at all. So I think it's relativity. So it's really about, do you think the market can continue to go up here? You know, if I put my money in, will other people come and buy it behind me? If you think it's going to be people allocating from institutional portfolios into gold, as opposed to workers going and buying some ounces, I think, to me, it still looks like that's very much the theme. So I guess to jump to the chase, I don't think we've missed the boat when it comes to gold. I mean, clearly the tide goes in, the tide goes out in the big cycles, but the big cycle still looks like it's really underway, and that's a broader cycle for commodities. This, as a lot of the conferences you and I go to, are a lot broader. This one's obviously purely a gold conference, or gold and silver conference, but gold still looks good, but it has led the way, and maybe it's a time for some of the other commodities to catch up. We've been arguing for quite a while that oil was ridiculously cheap relative to gold, and it's played catch up.
So essentially what I'm hearing from you, Sean, is you're saying this isn't so much about have we missed the boat. It is a reframing of how we look at gold.
Yes, absolutely. Again, it's this, I'm not a gold bug. I'm not all in to gold. I have a quite sizable investment portfolio in gold at the moment because I bought quite a lot of stuff 5 years ago that's done very well. And that's great. Then do I want to sell it? Well, I have to figure out what would I buy if I sold it. Even if I thought gold might be going down in the short run, if I believe in gold in the long run, why would I sell that, have to pay tax and do all that, and then maybe not make as much money on the other stuff and turn around and gold's run again? So I think it's always relative. Everything's relative, Shay. Every time you buy something, you're giving away something else, or you're selling something to buy something else. In relative context, I think that's the point I'm making. On a relative basis, I don't think gold is yet expensive relative to a lot of other things you might buy with your hard-earned money.
Now, Sean, last year you wrote a piece on silverformining.com.au and you came across as somewhat bullish on the metal. Do you still have this position?
Well, I was very bullish when the ratio got out to 100 to 1. So when you could buy 100 ounces of silver for 1 ounce of gold, and in fact, I spoke at Kerry's conference, and I said, if we see that, this time last year, I said, if we see that, I'm going to take the 1 ounce I've put aside for my granddaughter. I'm going to buy 100 ounces of silver instead. And I did do that. I switched from the gold ETF to the silver ETF. I've subsequently sold that silver. That ratio went very dramatically in in a short period. But I was very confident about that potential for that run in silver when the ratio got to 100 to 1, which was really about $50 silver or $43 silver and $4,300 gold or something around that time, was because every Indian in the world and everybody in Asia who was turning up to convert that money every week into precious metals, or every month their savings, were faced with record high prices of silver and record high prices of gold in their local currency terms. So the price had never been, once we got over $50 for silver, the price of silver had never been higher, and the price of gold had never been higher than where they were at that time. But silver relative to gold had never been cheaper. So it seemed pretty obvious to me at 100 to 1 that, given the choice, the average Asian was going to say, well, I'll take 100 ounces of silver, because history says at some point 50 ounces of those will be enough to buy me an ounce of gold, and I'll still have, and I'll have 50 ounces of silver for free, if you like. And that proved to be the case. But once it got below 50, silver's run ended pretty quickly. So I think we've drawn some quite solid lines in the market at, 100 is cheap and 50 is expensive for the time being.
And finally, Sean, I know you are going to be appearing at Gold Coast Gold, as I said, starting on the 25th of March. Tell me, why are these conferences still important to attend for gold and silver investors?
Oh, well, I bought 3 stocks at the Gold Coast Gold last year that all did very well. And why did I buy them? I had a strong belief 12 months ago that the gold price was going to be stronger, and I got to sit or stand and talk to some of the CEOs that were presenting there. I saw their presentations. I went and asked them questions, And the kind of confidence in a couple of the people, the excitement in them was just palpable. They're not giving you anything away. They're not telling you anything they can't tell you under the stock exchange rules. But when they're talking about it, you're talking to the person this is their passion project, and they've been working on this thing in some remote part of the world for years, and it's all coming together. And I think I said last year, and there was a bit of a Melbourne Cup theme where Kerry had the Melbourne Cup up there. My investment, a lot of my personal investment is, I would say, I back jockeys, not horses. And I don't bet on the horses, but good jockeys only take rides on good horses. So, I think there's a lot of people who follow racing that, back the jockey as much as they do the horse. Well, for me, if I've already decided gold's a good place to be, I want to be on the best jockeys in that race. And I met a couple presentations I'd seen for a while, and finally saw it, and a penny dropped for me. So the conferences are good because you get to see these ideas. You get to talk to other people in the room and get their sense of what's going on. You get different perspectives. There were quite a few different perspectives. I didn't agree with everything that was said by some of the people at Gold Coast Gold last week, and I made that clear in my presentation. So again, it's about going there and trying to distill the ideas, because everybody might be right over a different time frame. Not everyone's always going to be right, but I think you get in a group like that, it's just very it's better than sitting in your room, dark room somewhere on a computer screen, trying to take advice from people on Reddit, for goodness sake.
Look, it certainly is, and I love the analogy of backing the best jockeys in the race. Listen, unfortunately, my only racing instincts come from my dad, and he told me to always bet on the grey. So I think yours is much stronger in this one. Listen, Sean, this is a great chance to talk all things gold, and I can't wait to see you in person next week.
See you on the Gold Coast.